Hi, welcome to Next Round with Mortgage Mamacita and Temara.
Hello.
We're going to be talking about all things mortgage today, so let's go ahead and jump in. We're going to kind of introduce you. So first thing that we want to talk about, how did you get into the mortgage industry?
I got into the mortgage industry right out of high school, actually. I was studying for my real estate license, and then randomly, by happenstance, got introduced to someone that needed a loan officer assistant. Figured this is kind of in the same industry. I'm just going to do that, and ended up falling in love with it. So got licensed, and here I am 10 years later, still loving it. So yeah, that's how I got into it.
Awesome. What attracted you to working for a broker versus a lender or bank?
Ooh, great question. So I have been both. So I've been a retail lender before. That's actually how I started out. Not really knowing any differently. So retail bank to start. Then I was introduced to the broker world, and my mind was completely blown. So when I was introduced to the broker world, I actually thought it was fake. I remember seeing the rate stack, and I did not believe basically my boss. We were kind of chatting about me coming over, and I truly did not believe it. And I remember that was my deciding factor, making my decision to leave my retail lender at the time. I just remember thinking I cannot, from my moral compass standpoint, I remember thinking I cannot morally go back to the company I was with, doing loans for my family and friends, knowing that these rates and fees exist on the other side, being a mortgage broker, and just having the flexibility of having the other options with just different products, and the flexibility of just not having that one fit in the box with a retail lender, just having the one product and things like that. So that is really what made my decision very easy to go to the broker world versus retail lender. So
love it. What are you seeing in your current local market right now, and are there any surprises from the last year?
Current local market, it's definitely, it's no 2020, 2021. We're still seeing growth, but it's slowing down. Honestly, the way it should be, right? 2020 was insane.
Crazy.
I think we all remember that time. It should not be that way. So still seeing growth year over year. It's normal growth. I think people are getting used to the fact that rates are where they're at, but people are moving, right? I think they're kind of actually. There was a statistic that came out that it's actually the lenders that are kind of saying, okay, we're waiting on rates to come down. It's the consumers that aren't really thinking that anymore. It's those people that are saying, okay, I'm willing to kind of give up my 3% rate to move because rates are kind of where they're at. We're not sure if they're going to come down. So it's kind of the mortgage lenders and the mortgage brokers that are banking on rates coming down and waiting for that. But it's actually the consumers that are like, okay, well,
just accepting the
right, just accepting where we're at.
Yeah.
But yeah, overall growth or, home prices have slowed, still growth year over year, but it's coming down to where it should be. So.
Yeah. How are your borrowers' expectations changing with your communication, tech, speed?
Yes. So borrower expectation over the years, just being in this industry 10 years, it's completely changed. So borrowers' expectations, they want speed. Speed is everything right now. If you don't have systems in place that can give your borrowers, technology that they can, get an answer from you right away. If you don't have technology that can give them what they need right away, you're really behind.
Sure.
You really, really need that in this market. If you don't have an LOS system that's, up to speed, if you don't have the tools in place that are keeping them up to speed with rates and what's going on in the market, you're really falling behind. So you need that technology. You need to work with partners that are really up to date with what's going on in the market, up to date technology. That's extremely important. I do find that lenders and brokers that aren't keeping up with the most up-to-date technology, they're not winning in the current market. So extremely important because consumers do expect that.
Yeah. As far as your borrowers, are there tools in place to create transparency on their end as far as like rates or?
Yes. Yeah. I mean, at least for my company, we have complete transparency online with all of our tools and what we provide. I think that's really important and consumers can see that, right? So I think if other mortgage brokers and lenders aren't providing that, it's becoming really it's becoming really apparent that, hey, a lot of lenders are doing that. Why are you not doing that?
Right.
So I also think that's extremely important, the transparency piece of it as well. And again, the technology is really important with that because you need good technology to provide that transparency.
Yeah.
So.
Awesome. Let's see. How do you build and nurture your realtor partnerships? Do you have any do's or don'ts?
That's a great question. I think with realtor partnerships throughout the years, it's gone, I've gone another direction than I would say I started in the beginning. So in the mortgage industry, you're going to see a lot of partnerships that are built on financial gain. So you're going to see a lot of marketing agreements that actually can be quite against, RESPA, where you're actually paying to partner up on leads and things like that. I don't do that at all. I want very clean business. I want people to use me because they want to use me, not because I'm paying them to, go in on leads together or,
Right.
that's very important to me. So that's how I build my business. I want people to refer me because they know I do good business. They want to work with me. And because I care, right? I want them to know I care about our clients just as much as they do. That's extremely important to me and just goes in hand with that transparency piece.
Yeah.
But that still exists, sadly, out there. I still see that a lot. And hey, to each their own. That's not necessarily what I agree with, but again, to the transparency, that's how I like to build my business, and that's how I'm kind of doing it these days. So
Perfect. What do you think's the most rewarding part about being a loan officer?
I absolutely love. I call it kind of Tetris, or building a puzzle together. I love when someone comes to me with a problem file, as I would call it, where, another lender may have had it or can't figure it out. And, or someone thinks that they can't own a home,
Right.
or they're like, oh, 3 lenders have touched this. I don't think it's possible for me, and just taking it and figuring it out. Or, it doesn't matter if I've had to work with them for 3 years at this point. Just really doing what it takes to make those puzzle pieces work for them and get them into a home. That is my absolute favorite thing about what I do, is taking someone that just didn't think it was a possibility for them and getting them into their home for their family. It's just absolutely so rewarding.
So fulfilling.
Yes,
for sure. If you weren't in mortgages, what career do you think you'd be in?
Oh man. Well, I'm very passionate about fitness, wellness. So probably something along those lines, helping people in that realm. Not sure exactly what that would look like, but love helping people. So maybe some type of nutrition, type of
Health.
health and wellness venture of some sort.
Yeah.
Not sure what that would look like, but very passionate about that.
It'd be in that area.
Yes.
Love it. What advice would you give to a first-time home buyer in this current market?
I wouldn't say lower your expectations, because that's not the right way to go about it. I would say make a plan, right? I always say to my first time home buyers, it's going to be your starter home. And I always have a plan to build wealth, right? So, your starter home's not going to be your dream home. Let's get you into something, whether it's a condo or whether it's a little bit smaller than you like, or if it needs some work. Let's just get you in, right? Because that's going to build equity over time. A lot of people don't know that you can buy your second home with as little as 5% down. So you take the equity from your first house, roll it into the second home that's a little bit better, and you just keep climbing and climbing until you get to your dream home. So, I have a lot of people come to me with all of these expectations. Just lower your expectations a little bit. It's hard right now, right? So it's a really, really hard market for first-time home buyers to tap into for a lot of people. But it doesn't necessarily have to be if you just lower your expectations a little bit. And then, we'll just make a plan to build that wealth and just keep building you up.
Just kind of being realistic with those expectations.
Yes, because it is, it can be hard. And I think a lot of people get really discouraged,
Right.
But you don't have to. And then as long as we kind of get a plan together to get you where you want to be.
I love that. Yeah. What is the most financially sexy thing someone can do?
I wouldn't say be debt free, because you need debt to have a credit score.
Sure.
And mortgage lenders are going to want a credit score. Just don't carry a lot of debt. Have a small car payment. I did those large debts completely eat away at your purchase power. So,
right.
If you have a credit card, rule of thumb, 30% of its limit. Keep it 30% or under of its limit. Pay it off monthly. Just don't carry a lot of debt, because that's going to completely eat away at your buying power when it does come time to purchase a home. Just pay your bills, be financially responsible. Just don't finance everything. Finance a little bit.
Just care about your credit.
Yeah, care about your credit.
Just care a little bit.
Yeah, care about your credit. It's very important.
I love it. Do you think that owning a home is still the American dream, or is it just stress with a lawn?
Oh, that is a really good question. I think as a mortgage broker, I think a lot of people are going to expect what I would say here. I think owning a home, I think finances in general are very, it's very psychological, and it's very emotional. So I think a lot of people in finance, they're going to be, yes, you need to own a home to build wealth. And I don't necessarily agree with that. I think that it's what you want to do. It's what is going to make you happy, right? If owning a home is your dream, then, take the steps to do that and work with a mortgage broker or, financial planner to get you there. If that's not if that's not a goal of yours, what is that going to do for you? Right? So it's all about what your goal is and what's going to make you happy at the end of the day. So no, not necessarily. And also it's become a lot less attainable. So to call it the American dream, I don't know if I would necessarily call it that myself. Now, to see what I've seen it do for people, I absolutely think it's important for me, and I would recommend it as an asset. Because I've seen what it's done for people. And if you look at the statistics for, the wealth in households with people that own homes versus the people that don't, it's astonishing. So for me, I would say, it's very, very smart. But it's so psychological and emotional for people that, you've just got to look at what's important to you.
Yeah, it's a great answer. What are your thoughts on the proposed 50-year mortgage?
I think that's already gone by the wayside, which is great. So I have mixed feelings, because I think, so let me back up. The whole point was to make housing more attainable, or to, fix the housing crisis. That's not going to fix the true root cause of fixing the housing crisis. That was the point. That's not going to fix that. You need to increase supply. That's not increasing supply. That's kind of slapping a Band-Aid on the entire issue. Now, if the whole point were to, get people into homes, that does make it more accessible. So if that's all we're focusing on, sure, that makes it more accessible for people. And I think that's great. Any way we can get people into homes, that's fantastic. But it's kind of a catch-22 in that case, because you are now getting more people into homes and you're now raising the prices of homes because you're now pushing more people into the market. So if you don't have the supply to support that, you're not actually fixing the problem anyway. So
Agreed.
yes, it's getting people into homes, but you're not fixing the root cause. You're just going in a circle.
Gotcha. I would agree.
Yep. But I don't think we have that in place anymore. So.
Yeah. Okay. This is just going to be kind of a rapid fire round. Which is scarier? An appraisal delay or a borrower's dad who's an attorney?
An attorney?
They want to read all that fine print.
Appraisal delay. Or borrower's dad who's an attorney. That's a good one. Because it's scary for different reasons.
Both are scary.
It's scary for very different reasons. Oh man, an appraisal delay versus, I would say an appraisal delay, just because, me as a lender, I'm not the appraiser, right? So it's still kind of a third party where you're like, oh, that could kill the deal potentially, because you're waiting on the appraiser. You don't know where it's going to come in. Is the value going to come in low? If it's the borrower's dad who's an attorney, if you don't like the fine print, or you have a problem with the house or the loan and you want to back out,
yeah,
that's kind of on you.
Yeah. Yeah.
So, I would say the appraisal delay, because at the end of the day, if the borrowers and the dad is all gung ho about the deal and the lending or the appraisal side comes in, I have to make that call and say, hey guys, this came in a little bit low, or, but if the dad just doesn't like the deal, that's not.
Yeah. That's out of your hands.
Looks like you're going to back out.
Yeah. The appraisal has trickling effects.
Yes,
yeah.
Exactly. So I'm going to go with the appraisal delay.
Okay. Yeah. Your preferred workout, chasing conditions or chasing realtors?
Chasing realtors.
Yeah.
Yeah. I'm a loan officer, not a processor. Yeah. That's why I'm a loan officer.
Yeah.
Yeah. That's in sales.
You're like, I don't spend much time chasing those conditions.
Yeah. I'll do. Yeah. I will. But no.
Yeah. Not a lot of time there though.
Yeah.
Okay. Would you rather have 15 offers on one listing or 15 revisions on one loan estimate?
I think 15 revisions on one loan estimate, because that means we got the deal, or my borrowers are getting the house.
Okay.
So, yeah, if there's 15 offers on one listing, my borrowers might not get the house.
Yeah.
I'd rather,
the deal's in.
yes.
We're working on it.
Yeah. I'd rather have some battles, go to bat for whatever I need to do on that loan.
Yeah.
If we got an offer accepted.
I love it.
Yeah.
Okay. The NMLS test, trauma or character building?
Trauma or character building?
Yeah. Which would you say it was? Was it traumatic?
Oh, me taking the okay, I see what you're saying. I thought that was a question on the NMLS test. No. Okay. Trauma or character? Okay. Traumatic.
Yeah.
Because you don't really, there's so much that you learn outside of it's almost like the driver's ed test, where until you get out there in the real world,
it means nothing.
Yeah, you're like, none of this taught me anything until don't get me wrong, there's so many legal things you absolutely need to know. That was a bad answer, but yes, you absolutely need to know everything that you are taught in school, in CE, on the NMLS. But yeah, until you're actually out in the real world, that doesn't teach you anything about the real world. So
Right.
yes, traumatic.
Agreed. Pre-approved or pre-qualified?
Pre-approved, I actually I don't pre-qualify in the sense that I'll never give a pre-qualification in the sense that I didn't run through a full AUS approval before I give a letter. So, I will never let someone just tell me what their income is, and give a pre-approval. I don't know how that's still happening.
So you're not doing Credit Karma credit.
No.
You're not accepting those for your pre-approvals.
No, I care about my reputation.
Thankfully.
So no, I personally, I don't think it's that hard to get a pay stub. You know,
Yeah.
I've had people get mad at me before, you know, in a panic to get an offer in, like, hey, I need this right now. And I say, hey, you know, it's not that hard to get a pay stub. So,
Right.
you know, get me a pay stub. We can do a soft pull on your credit. It doesn't take that much time. I can do it in 15 minutes. So, you know, my reputation in the industry is very important to me. Like if you get a pre-approval letter from me, the deal most certainly is likely to close. So,
it's a real stamp of approval.
yes. Yeah. So that's very important to me. So yes, absolutely pre-approval with an AUS approval, credit pull, pay stub, all of that's going to be verified. So yes, that's going to be my
I love
answer.
it. Yeah. Which is more of an emotional roller coaster, the mortgage process or dating apps? I know your answer, I think.
Yeah. I'm going to go dating apps.
Yeah, that's fair. You don't have to elaborate. That's fair.
You know, I know the mortgage world pretty well by now. And even through the ups and downs, like I'll take that.
Okay. I love it. That's fair. Faster turnaround, underwriting or Chick-fil-A drive-through?
Underwriting turn times are pretty fast now.
I've been seeing.
If you use the right lender, gosh, neck and neck. But I mean, I don't know. I haven't been to a
You have
Chick-fil-A.
time to go through Chick-fil-A while the file's in underwriting. It'll be done.
Yeah. Yeah. I mean, so we're getting same day approvals now. So
That's great.
like neck and neck. Can I go with that answer?
Yeah. It's perfect. Does CTC mean clear to close or clear to celebrate?
Oh, I haven't heard that. I like that. I say clear to close, but I might start using clear to celebrate.
I like it too.
I'm going to still say clear to close until we get to the closing table, though.
Then you can celebrate. I love that.
Exactly.
Bigger jump scare. We need one more document, or are you available for a quick call?
As a consumer?
As the LO.
Oh, okay. Yeah. I would say one more document.
Okay.
Because what is it?
Yeah, that's fair. Your preferred chaos, Friday, 4:58 p.m. pre-approval, or Monday, 8 a.m. emergency disclosures?
Friday, 4 p.m. chaos.
Okay.
Because that's inevitable.
Mm-hmm.
You're never going to have a Friday go by without some 4 p.m. chaos.
Right.
I just always look forward to it.
Just roll through it. Yep. Which should be a felony, faxing documents or screenshots of pay stubs?
Ooh. Screenshots of pay stubs, because a fax, you're usually going to get everything you need.
Right.
It might be old school, but it's going to be there.
When's the last time you got a fax with docs?
It's months.
Really?
Yeah, but everything's there.
That's surprising.
Everything's there. You're not really going to get everything. It might be a little, blurred. It's going to be, but it's usually there. A screenshot or like a photo of a pay stub. You might be blurry. You might be
Missing
cutting
part
something
of
off.
it.
A fax is reliable.
Yeah.
It's old school, but it's reliable.
Call it what you want, but it's going to be there.
Hey, they're still here.
I love
Old
it.
reliable.
A bigger miracle, the appraisal comes in high or bank statements uploaded correctly?
Gosh. I would say bank statements, because more often than not, even though we will specifically go in and state all pages, even if
They're
left
blank.
it's still, we don't get that blank page.
Or something's crossed out in Sharpie.
Yes. Yeah. So, hey, love a high appraisal, but does not matter, even though we have that asterisk that says, even if the page is left blank, they still don't get
Okay, leaving it off.
And I just have to go back and ask. So,
Okay.
please include that blank page.
Okay, well, that's the end of that round. This next one's going to be approve or deny. So all you need to say is approve or deny. Don't elaborate. Splitting rent 50-50.
I can't have a follow-up question.
You can. You can.
Are we friends? Like, what's the situation? Like, are we
A significant other or partner.
are we on the mortgage together? This is rent?
Rent or mortgage. Splitting that.
Are we on
expense.
title together?
Yeah. Yes.
We are on title together.
Yeah.
Okay, that's fine. Approve.
So, but to follow up, if you're not on the title or the loan, no 50-50.
Deny unless you're on title.
Okay, that's fair. Renting.
Deny.
Okay. Dating someone with a 600 credit score. Deny.
Are they working on it? Like, approved if they're in credit repair.
Okay, that's fair. It's forgiving of you. Crypto bros.
Deny. No, approve. Approved.
Okay.
Approved.
Okay. Reverse mortgages.
Approved.
Okay. Taking out a HELOC to go on a luxury vacation.
Denied.
Okay. Combining bank accounts before marriage.
Approved.
Okay. Leasing a luxury car while renting an apartment.
Denied.
Okay. Living with your parents until you're 30 to save money.
Approved.
Using credit cards only for the points.
Approved.
I knew you would approve that. Cash is king mindset.
Denied.
Okay. Paying your kids for chores.
Approved.
Okay. Buying a home with zero down.
Approved.
Paying extra on your mortgage.
Approved.
Using Klarna Afterpay and Affirm.
Denied.
Okay. Buying an iPhone on payments.
Denied.
Okay. That's the end of the round.
Some of those were tricky.
Yeah. Some of your answers surprised me.
Which one?
Some of them were more forgiving than I thought.
Which one?
Let's see.
The 600 credit score.
For instance, yes. Combining bank accounts before marriage.
Well, the construct of marriage is kind of going.
Away.
We don't need to get into that on this.
We'll save that for another day. Let's see the other one. I don't know. I guess that one.
Yeah. I could see why that would be surprising, but yeah, I'll save that podcast.
For another time.
Yep.
Do you have any loan programs right now that are unique or specific to like 1099 or self-employment?
Yeah. We're in Utah County right now. So we do. So we have traditionally you're going to need tax returns to qualify for a loan if you're self-employed. So a lot of these summer sales jobs, pest control, solar, they are paid 1099, which is technically in the mortgage world self-employed, which traditionally you're going to need 2 years of tax returns. So the problem is with these tax returns, a lot of people are not claiming what they actually make, which is fine. A lot of expenses that they have to pay, things like that. So a lot of these people have trouble qualifying for the amount of loan that they would like to qualify for. So some of our lenders, they have 1099 programs where they will actually just look at the amount you have on your 1099. So these are perfect for these summer sales jobs. So we do a ton of business with these people that do these summer sales jobs. Because,
huge.
like I said, they just look at the 1099 number. There are some nuances to that, right? You have to have been in this industry for a certain amount of time. So, if anyone wants to talk to me about that, they certainly can, but it's really, really cool. Also bank statement programs. So if anyone is, outside of summer sales, they just own their own business. Same thing. They don't necessarily want to show their tax returns and they just want to show kind of the profits that are coming into their bank account. We can look at those too. So many creative programs.
How are rates on those?
They are, because it is what is considered a non-traditional product. They are going to have slightly higher rates than your traditional, what we would call conforming product. But that's to be expected, right? Like everyone kind of expects that with a outside of the box type of program, but it's really not too much.
Fairly comparable.
Right.
Okay.
Yeah. Very, very competitive. So, very creative products though. So a lot, kind of to my point earlier about people that think they can't really get into the housing market because they might have a unique situation. We can get so creative. There's tons of programs out there.
I love that. Yeah. So over the last couple of years, rates have gone up inevitably. That pushed a lot of loan officers out of the market, out of their careers. What's kind of been your thing that's made you stay and allowed you to stay?
It's a great question. So yes, sadly, and this is not only with loan officers, but it is with realtors, just the entire industry. It was really sad to see. Over half, got completely wiped out. Mortgage companies shut down.
Layoffs, lots of layoffs.
Tons of layoffs. Yeah, very, very sad. But I will say there was a big purge that needed to happen. I do think there was a lot of people that got into the industry in 2020 when, if you had a pulse, you could do mortgages.
Right. And if you had a pulse, you could get a mortgage.
Right. So I do think that there needed to be a big cleansing of the industry. So, as sad as it is, because there were truly a ton of people that did lose their jobs that had been in the industry for so long. But there were also a lot of people, and people I personally know that, hopped right into the mortgage industry, made a bunch of money while they could, and then they just got right out. And I don't necessarily think those people should be in the industry because they don't truly
have the passion,
have the care that I think needs to be there, that people deserve, right?
Yeah.
That the consumers deserve. So it is sad, but, that's why, as hard as it's been, that I've wanted to stay in the industry, even though, financially, of course, for everyone, it's been much, much harder. And, speaking to other people in the industry, I think that you need to know that this industry has its ups and downs, and you need to prepare for that.
Yeah.
You need to not go buy new cars and new houses when things are really, really good, and you need to prepare for the not so good times.
Yeah.
But no, that's just it, right? I think you need to have the mentality that you really want to care for people and you want to do the right thing by people, and not just get into the industry when times are good just to make a ton of money and then jump right out, because that's what I do see people do.
Yeah.
Is they jump in, then they jump out. Jump in, jump out. And that was really important to me. I wanted to be a constant for my clients throughout everything.
Yeah.
So if they needed everything, because I actually get referrals from people that used to be in the industry, from people calling them saying, hey, I need help. I need to take cash out of my house, or and they're just not in it anymore. And then I get that referral. And so that's really important to me, is just to be a constant for my clients throughout everything. But I get it, right? We all work to make money too. So I totally get it, but just be smart, save your money when times are good, and just be frugal.
All right. What is one thing that you wish more people asked you about?
One thing I wish more people asked me about, I wish more people took the time to understand rates and fees a little bit more. I have a lot of people kind of just come right at me with, hey, what's the lowest rate? Or this lender offered me this rate, without truly understanding, first of all, what the fees are for that rate.
Yeah.
And second of all, if that even benefits their situation. Right. So that's what I would recommend first and foremost. Like, if you are talking to a lender, tell them what your situation is. Like, how long are you going to be in the home? based on what rates are doing at that time, what do you think rates are going to do? Do you think you're going to refinance in a couple years or 6 months from now? Like, talk to your loan officer. What do they think is going to happen in the market? Obviously, no one really knows. But at least have that discussion.
Yeah.
I see so many loan officers just, give them the lowest rate. It has 10 grand in fees. That's not going to be the best situation usually if you're planning on staying in your home for 2 years, 3 years, and then, upsizing to a better home. So just ask more questions, right? And as a loan officer, you should be asking your clients those questions.
Understanding.
Right. And I think a lot of times, unfortunately, people do obviously want the sale. So they are just giving people the lowest rate with the highest amount of fees. And, that might look a little bit more attractive, not with those fees, but so just ask more questions, talk about your situation a little bit more, and that's the loan officer's job. And unfortunately, that's not happening. So as a consumer, be more empowered, ask more questions, talk about the fees, talk about the rate, shop around.
But understand what you're shopping
Yes.
for. Not just, I'm looking for the lowest rate.
Right.
Understand why it's the lowest rate.
Right.
Yeah.
Right. Understand the fees you're getting charged. If you are shopping different lenders, which you should be, compare apples to apples. Like don't compare one rate with a different rate with different, compare same day, same rate,
Right.
different, and just talk to someone, talk to different people, understand what you're looking at, and just ask questions.
I love that.